Hello guys, this is fairbinaryoptions.com, and let's write actually on the screen here who we are and what we are doing here. So let's say that this is fairbinaryoptions.com, and I would like to focus a bit on the Sunday on the euro and the US dollar, the most tradable currency pair or the most traded currency pair in the world in terms of liquidity, in terms of market participation, in terms of interest of market participants. So make no mistake, this one is, let's say, the reason why markets are moving. If the euro US dollar is not moving, then the whole market or the market as a whole is not moving. Now, I don't know what you're seeing on these charts, but from my point of view, I'm seeing a pattern that is just building energy to break higher. And I want to explain a bit the reasoning for that. I'm looking at a potential triangle, and this triangle to start from here, from this area, and to be something like A, B, C, D, E, and to break higher. Like any triangle, normally this one should be no different in the sense that it should travel from the ANC trend line and the B to D one, of course, like this, and we have exactly the same scenario into this area. Now, it is important from where we are starting the count, or actually from where to look for that triangle to begin. And I would say it is extremely important not to look at these highs, but to look here, see another triangle. So from this very moment of time to the downside is our, let's say, interest into analyzing the euro US dollar. So wave A, it is this one here, the move to the downside. From the highs, some highs, and then a move to the downside. Then we need a move to the upside for the B wave, like this. Well, the B wave is this one. Then we need a move to the downside for the C wave, like this. Well, the C wave is just being this one here, or maybe even here, and this to be the D wave, exactly the same. So let's say it might be that the C wave is here. Then we need a D wave to the upside. Now this D wave, we have some specific rules for the D wave, and the D wave is not let's say going to be just like that at any moment of time. For example, if this would be the D wave, then it is not possible for the E wave to make a new low. I mean, it is possible, but breaking the rules. If this is the D wave, that's another story. So I would say this is a D wave with the non-farm payrolls in the United States. So this is the D wave. And then the E wave to the downside here, the non-farm payrolls, and then price aggressively being bought to the upside and spending the weekend over here. Now you can call this one as you want, but I'm calling this one bullish price action, as we have a low and then a higher low and a higher low and a high. All these dips, not only that they were being bought, they were being bought aggressively. But take a look here, a dip to the downside, bought aggressively, 38.60. Tried for 38.80 area, tried once, 2 times, 3 times, 4 times, 5 times, including on Friday. But all the dips are making a low, a higher low, a higher low. So what I would like to do is for that 38.80 to be broken, and therefore this highs here in 38.88 or 39 to be broken as well, as that would be the trigger for our call options, because what I would like to do here is to go and buy call options. So this to be, I would say, either here or here, it doesn't matter, alright, like this, the ANC and the B to D trend line. And what I would like to do is to buy call options when price is moving above 138.90. Now the ECB is coming this week, so I would say most likely, or I would like to see price breaking 138.90 before the ECB, trying to, let's say, ignore all the shorts and all the bears and all the short signals on the market. But nevertheless, I would still favoring the upside, as this A, B, C, D, E looks to be a continuation pattern. So looking to buy call options by the time price is breaking above 1.3890, and it's not that far, with end of week expiration date. This is the plan, this is the strategy here on fairbinaryoptions.com. So make sure you go and check our website, check our analysis, and of course make sure that you know that all these recommendations and analyses are possible due to the help of our sponsor here, Lion Eye. Bye bye.